buy and where to sell in the market, right? So at this point, everybody should understand or identify the different structures when the market is trending up, when the market is trending down, like identifying higher highs, higher low, lower highs, lower low, and stuff like that, right? So if the market is trending up, generally you would want to look for buy opportunities, right? When the market comes back to a discounted price. And if the market is trending down, you would want to look for sell opportunities when the market is at premium price, right? Now, what is premium price? What is discounted price, right? So premium price is basically expensive price in the market, right? And discounted price is cheaper price in the market, right? Where people generally look for buy opportunities, right? So it's just like the stock market, right? Say a stock started to sell for like $1, right? And that stock went all the way up for like say $10, right? So from one, sorry, so from one all the way up to $10, right? So say this is like Tesla, right? And it started to sell at to sell for $1, right? And price went all the way up to $10, right? You buying this stock would not want to buy the stock at $10, right? So you'd wait until persons who got in at this $1 starts to sell at $10, right? So that means price is gonna come all the way back down, majority of the time passing 50%, right, all the way to discounted price, because this price is actually cheaper than 10, right? So persons now that didn't get a chance to actually buy here are gonna actually look for buy opportunities at discounted price. Say maybe this is at say $3, right? Say $3. So stock started to sell for $1, went all the way up to 10. You're not gonna want to buy this stock at $10, right? When it started to sell at $1. So you're gonna wait until the price falls to a discounted price. Then you look for or you buy that stock for like $3. Way better than buying the stock for $10, right? And then once price reach premium price again, say here, so persons that actually get in for $3 or whatever can actually sell when it's at like $15. Persons that bought at one can sell at 15 also. That is premium price, right? So market generally starts to fall again. Persons that didn't get in at $3, um, maybe buying for like $6, $7, right? And price continue to trend up because this stock would be doing good, right? So it's basically the same thing with the forex market, right? It's the same thing with the forex market. So you generally want to sell at premium price and buy at discounted price. Now let's get into the structure, right? Let's incorporate this with the market. So here here we have a low and the market create a high, right? Boom. Now the market pushed from this high and create a higher low because it is higher than this low coming from a high, right? So this is our higher low right here. The market push up and break structure right here, creating a new high right there. Now market push down, right, all the way down here and created new higher low. Market push up from this price point, break structure, and created new highs once more, right? Price came back down and created new higher low. It is lower than this higher low here, but it's not a breaker structure. We'll get to that in a few minutes, right? Price push up, break structure again right here. If it broke structure by a pip, it is still a breaker structure, right? Once we identify that the market did not came back to collect any liquidity or stuff like that, it's a breaker structure. If it's even broken by a pip, right? So that's a breaker structure right there. And from that price point right there, we created a high low right here, right? That high low created a high, and then that created a higher low right here. Market broke structure over here. All right, notice how the market pushed up right here and then pull back right here. This right here is not a high low. This did not came from a high, so this is not a high low. This is just a complex pullback. Complex pullback is like a trend in a another trend. So it is a say high on a lower time frame, right? But not on the 1 hour, right? So that's just a complex pullback on the 1 hour time frame. So this right here would be the high, because this was the structure right here that broke structure over here, and then from this high we created high low right here, right? Market push up, broke structure right here, and then created this high low right here, and then a higher high. And the trend continues, right? Now, how do we incorporate premium price and discounted price or whatever in the market, right? Now, this is how you do it. So by the way, this is my fib tool right here, right? This is my fib tool. What I did, I just took out everything else and left the 0, the 100%, the 50%, and my 78.6%. To me, 78.6 is like the ideal discounted price for me. The ideal premium price, sorry. So the ideal premium price for me, right? So anywhere above the 50% in a downtrend is a premium price. Anywhere above the 50%, right? In a uptrend, anywhere below the 50 is discounted price. So we're gonna look at discounted price, being that this right here is a uptrend, right? So what you want to do is you want to get your discounted and premium fib, because that's what I call it, right? You want to place it at the low to the new high, right? Like this, right? You know, notice how price pushed past the 50, which is the equilibrium price, and came all the way back in discounted price. Now, note, right? Note, majority of the time, that is where your point of interest is, in premium and discounted price, right? That is where you have inefficiencies and order blocks, unaccounted orders in general. That is where we look for our point of interest. So it's basically extra confluence where to get your point of interest, right? In this area, you can identify that there is an inefficiency right here. So this would be our point of interest, and this is in what? Discounted price, right? Now on to the next one. Look at this. Discounted fib from low to new high, right? Now this one is a little bit tricky, right? But as I said before, this right here is not a breaker structure. What happened was that there was liquidity here in the market, right? Liquidity in the market. The market generally pushed up from here, right, which was a higher low. But when the market came back down to create this new higher low, reason why it pushed past this was because the market created liquidity and in the discounted price area we had inefficiency that was unaccounted for. So price generally or literally just tap back into this area to collect that liquidity to push to the upside, right? So that is two entries, right? Two entries just incorporating discounted price and proper structure, right? Look at this again, from low to high, right? Price didn't reach the, not even the equilibrium price, but here you have a point of interest close to the equilibrium price. Price generally, or price was generated right from here. So price was already moving. So that is why there was no need for the market to actually come back into this area, because all orders were accounted for here, right? Except this one. That is why price didn't really push past this area into the discounted price. Now look at this, from this low to that high, price came back into discounted price, right? What do we see here? Order block, right? Over here again, high to low to high. What do we see here? Inefficiency, right? So it's extra confluence to actually get your point of interest. Look at that. And we can go on and on. So always remember, right, when looking to get a buy in a uptrend, because you know you buy at higher lows, right, in an uptrend, um, you can use your discounted and premium fib to actually get your point of interest, right, where your point of interest should fall, because majority of the time persons are going to want to buy at discounted price. You're not going to want to buy at a high price point, right? Now let's just do a quick example with a downtrend. It's literally the same thing, but just for showing purpose, right? It's just vice versa here. But let's just find a quick one right here. All right, so right here we have a little downtrend going, right? So this right here would be your lower high, and this would be your lower low. This would be another lower high. This would be a lower low. This would be a lower high, and this would be a lower low. Now let's look at this area, right? So price is coming down, right? So you generally want to draw your discounted and premium fib from the high now to the low. So it's the opposite in a uptrend, right? Now look what price did. Price came back where? In premium price this time, right? Premium price, because we're looking to sell, so we want to sell higher than we bought, right? So boom, there's a point of interest here. That this right here is a what? Inefficiency, right? Price literally came back to that area and then pushed down, right? Another example. So from here all the way down here, notice how price came back to premium price all the way up to what? 78.6 level, right? Almost the same high as the almost the same high as this lower high over here, right? That is ideal price. So look at this point of interest. What do we see here? Order block. Price came back to that, right? So it's literally the same thing. It's just that you turn this upside down, right, to get the premium price instead of discounted price. Because remember, as I said before, you want to sell at a high price point and you want to buy at a discounted price. So yeah, that's it